Welcome to Blue Chip Now, the podcast that gives you insider access to content that we tailor specifically for our clients. Whether you're climbing the corporate ladder or just seeking smart, efficient intel, we've got the answers to your most pressing financial questions. Join us as we break down the markets, debunk the headlines, and keep you ahead of the curve. Let's dive in.
Welcome to a special edition of Blue Chip Now. We are a bit off script today. We're going to go into or dive deep into a topic that relates to year-end planning, even though it's January. The planning topic today that we're going to talk about is charitable bequests. And we thought it would make sense to talk about this topic so that those who are charitably inclined can have time to plan for the most efficient ways to give their dollars to charities of their choice. So there's a lot of strategy that goes around giving dollars away, and we want to make sure that we're preparing our clients and the general public with strategies to be as efficient as possible. So I'm joined today with my colleague, Hayden Kibbey. He's going to ask me a few questions, and we're going to talk about a concept called Qualified Charitable Distributions. So with that, Hayden, thanks for joining me today.
Yeah, thanks for having me on, Dan. Appreciate it.
And let's kick this off.
Sure. So maybe starting off, how do people normally give to charity? Let's start there.
Lots of ways to give to charity. I would say that the probably most basic form of charitable giving comes from individuals just pulling out their checkbook, writing a check. These are after-tax dollars that are typically in your bank account. You've already been taxed on earnings. The discretionary cash flow resides in your bank account. And you want to give to a charity, you pull out your checkbook and you cut a check. So it's usually, I would say from our perspective, we're seeing that happening from checkings and savings accounts.
Got it. Okay. So for people, say in retirement, maybe on more of a fixed income, are there other ways that they can give to charity?
So there is, and this is where we're going to dive into today, and I want to talk about a planning technique. When you take a step back, there are over $40 trillion tied up as of the end of 2023 in retirement plan assets. And so there are other ways to give to charity outside of just your checking or your savings account. And today, let's dive into this concept of a qualified charitable distribution, one where an individual can give from their IRA as opposed to giving from their checking or savings account.
So just so I understand this, is that you just take the money from your IRA, comes into your bank account, then you give it to the charity, or does it work a different way than that?
There's a technique and there's a process to making this qualified charitable distribution. Let's take a step back and let's talk about how an IRA works, how distributions, the typical distribution from an IRA works, and then we can go into how this qualified charitable distribution works. So IRAs and retirement assets are typically pre-tax dollars. Now I'm going to generalize. There are Roth IRAs that are post-tax, but let's just go with the traditional IRA, individual retirement account. They're pre-tax dollars. And when an individual wants to access some of these dollars in their IRA, they take a distribution, and it's illustrated here on the screen. When the distribution comes out of the account, the individual will take a portion of that distribution, but a portion also goes to taxes, goes to the federal government, federal and state. And then if that person is charitably inclined, they're taking the net proceeds from that distribution after paying taxes and then giving to a charity. Okay. So if you want to leverage as an individual dollars from your IRA and give to a charity, you have to first give to the government. You're giving to the government before you're giving to the charity. You're only giving to the charity once you've taken that net distribution from your IRA.
Got it. So you're saying with a QCD, kind of looking at the other side, there's actually a more tax efficient way to go around the government and give more money directly to the charity.
That's exactly right. You can actually skip the government. And so as we have illustrated on the screen here, we can actually do a distribution directly from your IRA, skip over top of both you and the government, and give a gross distribution from your IRA directly to a charity. And there's a number of benefits to that, which we'll go into in a moment. But this technique, using this QCD, Qualified Charitable Distribution technique, you're able to bypass not only the dollars that go into your hands that you then pass on to the charity, but you're bypassing the payment that would be made in the form of taxes to the federal government.
Gotcha. So in theory, that money is never taxed. Like that money goes into the IRA directly to the charity, kind of skips the government forever.
That's right. It's there's a good chance that it was pre-tax going into the account. It grew tax deferred over many, many years. And when using this QCD technique, it's coming out of the account, going directly to the charity without ever having the government's hand in the cookie jar.
Wow, that's powerful. Well, you mentioned the benefits. Let's chat about those.
So I think first and foremost, we talked about it, a distribution from an IRA is typically taxable. When you're doing a QCD, you're paying zero tax. Okay, so that's first and foremost the main benefit. Secondly, when you have an IRA and you get to a certain age, that age right now is between age 73 and 75, the government starts to say, hey, you have to take out a distribution in what's called a required minimum distribution in order to pay some tax. We've allowed you to defer this money for many, many years, and now it's time to pay the piper. So they make you take out a little bit of that account value, pay tax on it so the government can get their money. Well, if you're pulling dollars out of your IRA and giving those dollars directly to a charity, your IRA balance is declining. It's declining. And so that means that the future required minimum distribution that you'll be forced to take is going to be lower down the road. So these forced distributions are now less because you're taking part of that account balance and shifting it to a charity as opposed to letting it sit in the account and compound and writing a check from your checking or savings account. If you're at the age of between 73 and 75 or older, and you're taking these what are called required minimum distributions, the QCD satisfies that. So if the government were to say to you, you're required to take out $40,000 from your IRA this year, and you did a $40,000 QCD from your IRA, guess what? That satisfies the requirement. So you don't have to take additional dollars if you're giving these dollars to charity. So it's not just giving money to charity and I have to take a distribution from my IRA to pay tax. The QCD counts as the RMD for the account holder.
So that would in effect keep your income down. You're not taking any additional money in the RMD.
That's right.
Okay.
That's exactly right. So those three benefits that we just talked about, reducing future RMDs, keeping your income lower, satisfying your RMD, that all benefits the individual. Let's not lose focus on the charity. A qualified charitable distribution puts more dollars in the charity's hands or pocket than an individual taking a distribution and paying tax on it. So it benefits the charity. So it benefits the individual, it benefits the charity. There are some other ancillary benefits that we could probably do a whole separate special episode on with regards to you don't need to itemize in order to get the benefit of a QCD. So that's a tax benefit. It also can help lower Medicare premiums. So if you're at the age where income matters, when you're taking money out of your IRA, those IRA dollars can impact your Medicare premiums. And this strategy bypasses all of that income. So that's another benefit to the individual. And I would say, lastly, if you're at the age at which you take Social Security, there's also a calculation made on how much of your Social Security is taxable based on how much household income you have. And that can be impacted by the amount of distributions you're taking from your IRA. And if those distributions are offset by a QCD, meaning the money is going straight from your IRA into the charity's hands, you're not going to increase household income, hence making more of your Social Security taxable.
Got it.
I think those are all great benefits.
Can we go back to the part about no needing to itemize? I just want to make sure I understand that, especially since the standard deduction has gotten higher and higher. I feel like fewer and fewer people are really itemizing their deductions.
Yeah, so meaning if the standard deduction, if you're donating less than the standard deduction, the donation to any charity really does you no favors. You're not getting a tax benefit because you're getting a standard deduction above the amount that you're donating. Okay, so in order to get a benefit, you would need to donate more than the standard deduction to get a true tax benefit to you as the taxpayer. With a QCD, the dollar for dollar transfer from your IRA to the charity skips your household income completely. So there's a dollar for dollar tax benefit for you. You're not recognizing any income, and the government's not taking any tax, and the charity walks away as the biggest winner.
Yeah. So there's all these benefits that we've been talking about. We probably should talk about the things you need to remember about QCDs as well.
Yeah, there's a number of factors that really need to come into play, and if you're going to work through this channel of making a QCD, you want to do it right and take the right steps. You want to make sure that the organization that you're donating to is a 501c3 nonprofit. And so it's important. You just want to make sure you check that box that it is a registered nonprofit charity. The QCD limit in 2025 for any individual is $108,000. So if you had $2 million in your IRA, you can't do a QCD and get credit for transitioning $1 million. But you can do up to $108,000. So if $108,000 helps you satisfy your RMD and it's amount that you're comfortable giving to charity, have at it.
That's an annual limit, correct?
That's an annual limit.
Okay.
That's right. So,
and it goes up every year, or at least has in the past?
It has been. It's been indexed with inflation. So yeah, the number has increased over time. We would expect in future years that number would be higher.
Okay.
It must be a direct transfer from the IRA to the charity. So if you're doing a QCD, it can't, those dollars, the distribution from the IRA should not come into your hands. It really needs to be a direct distribution from your IRA over to your charity. I mentioned RMDs and being between age 73 and 75, where you're in that age bracket where you're forced to take a distribution from your IRA. Well, you can actually do a QCD at any age older than 70 and a half.
So it doesn't line up.
So it doesn't line up with RMDs, but they do overlap. Mm-hmm. So meaning if you're going to do a QCD and really maximize the benefit of it, you want to make sure that you're 70 and a half or older.
Okay.
So you might not be at the age where you're forced to take distributions from your IRA, but you can still bypass the government and paying taxes on that distribution. So the last thing I think I would point out is the year-end deadline. So if you're going to do this and you want to get credit for the distribution and the charitable contribution, you want to do it before 12/31. And that's, I think, part of the reason why we're here today and talking about QCDs in January, so that individuals who are charitably inclined can plan for this type of technique if they have IRA dollars and execute that at some point throughout the course of the year. Oftentimes, I would say we see this done later in the year, but what you don't want to do is understand or learn about this concept the second week of December and not have enough time to actually execute.
Going back to, it must be a direct transfer from the IRA to the charity. I just want to make sure we're 100% clear on this. So you can't deposit the money into your bank account. Let's say you take the $50,000 you're going to give. That can't go into your bank account. But let's say I want to take the check to the charity. That's okay, right? Like they can send the check to me. I can take it to them. It just can't be written out to me.
So there is a way for you to take a donation or a charitable bequest to a charity if you really want to have that check in hand and hand it over to the organization. It doesn't have to bypass you in the sense that it's some wire transfer happening behind the scenes. You do have the ability to have your custodian that is holding your IRA account make a check payable to the charitable organization. You can then take that check and hand deliver it. In that sense, it's still bypassing you because the distribution's coming out of the IRA and going to the charity. Even though you're physically handing over that check, you get credit for handing over that check. You feel good about giving those dollars over to the charity. But the check wasn't made payable to you, so the government's not going to come in and tax that distribution.
That makes sense. Okay. So if I'm somebody with an IRA, I'm excited about what I've heard. How do I go about the mechanics of actually doing this QCD?
I think first step is get with your financial advisor. And so if you're a client of Blue Chip, reach out to us if this is something that could line up with your intentions for charitable bequests. If you're not working with a financial advisor, with Blue Chip or some other financial advisor, I would recommend reaching out to the custodian of your IRA account, the platform that is the account holder.
That's like your Fidelity, your Schwab, Raymond James.
That's right.
Okay.
Yep. Whoever you're getting statements from on your IRA account, and you could reach out to the custodian and ask them, how do I execute a qualified charitable distribution? And they'll be able to walk you through the steps. So either work directly with your financial advisor or go direct to the custodian that's holding the account. If you work with an organization like ours, our back office, our client service team here at Blue Chip will prepare the paperwork and will get your signature and make the process seamless for you so that the dollars either transfer over directly or we get you that check that you can hand over and feel good about giving those dollars directly to the charity.
Yeah, that's fantastic. So I guess what are the key takeaways here? Like, what should people know?
Hayden, really the key takeaway here is that we as individuals who are passionate about a charity have the ability to give dollars and keep the government's hand out of the cookie jar. And a QCD is one of those techniques that allows us to do that. So if you're the right age and you have the ability to make a QCD, I highly encourage you to consider it. It's a fantastic technique. You'll benefit and the charity will benefit as well. I think it's a fantastic strategy. I think we covered it all. So thanks so much for joining us on this special edition of Blue Chip Now. We hope you enjoyed this year-end tax planning technique that is being presented to you, not at year-end. So
January.
We have plenty of time to prepare for this. If you have any questions, as always, please feel free to reach out to us. And we look forward to hearing from you soon. Thank you.